Well, good morning to you. We've got a great day yesterday. Had some rain come through, helping out those crops. It's been a bit of a drought, but hopefully the rain continues and the hail stays away. But with hail in the forecast, I thought my first crop talk with Carson would cover crop hail insurance as an overview. So let's dive into the world of crop insurance and better understand how it works for your operation. Just for clarification, when I'm looking at the rules, regulations, and the aspects of the policy, I'm referring to the state of Montana. So if you're watching from anywhere else, just know that I'm talking about Montana. So just a quick disclaimer that this is just meant to be a quick educational video. It's not going to cover all of the different aspects of the policy or coverages. They may differ a little bit, but it'll give you a good understanding and a good starting point. But just know that it might not cover all aspects of the policy. So crop hail insurance at a glance is a named peril private product that is offered through each AIP or carrier. And because it's a private product, it's going to have different rates as opposed to NPCI. It's going to has the same rates for all carriers. Crop hail is going to have different rates for each carrier. So with that being said, it's very advantageous to quote out with the different companies, so that way you're aware of which company has the best rates and coverage for you. One great thing about crop hail insurance is it's very flexible and is flexible for your operation. It gives the ability to choose the coverage type and amount that you want on an acre by acre basis. So for example, you could choose to put $100 on a basic coverage, and then also put $100 of comp 2 on set acres, and you could do some on some acres and not on others. It's totally up to you. You have the flexibility to do that. You also have the flexibility to add or modify coverage at any time during the growing season, assuming that there's no existing hail damage on those acres. So for example, you could add $100 today, and then maybe a month down the road, if you decide that the crop's looking great, you could add some additional coverage then. It's a great complement to your NPCI policy because it's going to protect the top end of your crop that might not be covered by your multi-peril policy, especially in today's day and age when enterprise units are more popular on the multi-peril side. It's very possible for your unit or your crops to get damaged on a portion of it, but not all of it. So maybe you wouldn't get a payment on the multi-peril side, but having crop hail coverage is going to give you some coverage there and a payment there if a hailstorm comes through. Buying time is a phrase that gets used often and might confuse some people. It basically is just referring to the amount of time set that once we send in the necessary information that your coverage is bound and that you'll have coverage on those crops. Each company is going to have a different buying time. Some of the more popular ones around here for the carriers we use is either maybe a 2-hour binder. So you have insurance bound in place after 2 hours once the request is sent, or it might be 12:01 a.m. the next day. So like we talked about, you could have the ability to choose the coverage type that works best for you, and you can stack those coverages on top of each other. So what coverage type you choose is going to affect how your policy will pay if an indemnity is due after a hailstorm. So each crop and company is going to have different coverage types that you can choose from. And in the next few slides, I'm going to take a look at some of the more popular coverage types. By all means, it's not all of the coverage types available. If I went over all of them, we might be here for quite some time. So there are other coverage types available that might be beneficial for you, but I'm just going to talk about the more popular ones. Basic coverage is going to be one of the more popular ones. It's very simple to understand. It's just basically going to usually pay whatever the percentage loss is after the adjustment. So sometimes it might have a 5% minimum, so it has to be over a 5% loss in order for it to start paying. But after that 5% loss, typically it's going to pay whatever that loss percentage is. So if it's a 50% loss, it's going to pay 50%. So if you put $100 on, you're going to get paid $50. Typically, once it reaches 90%, they're going to pay that full 100% loss. And then some companies have a catastrophic loss award, which means that after a specified amount, so an example here, the 70%, it's going to pay an additional 0.5% for each 1% it goes over that specified amount. So for example, a 74% loss is going to pay 76%. Another popular one is DDA. It's going to be a little less expensive than basic, and that's because it has a disappearing deductible. Typically, it's going to be 10%. So what that means is that if, for example, if you had a loss of 20%, you're going to have a 10% deductible. So instead of getting paid 20%, you'll get paid 20 minus 10, which is 10%. Once it exceeds 25%, typically, then that disappearing deductible will go away. And once it reaches that point, it basically turns into the same coverage that you had on a basic policy. So that, again, if it was a 70% loss, you'd get paid 70%. If it's a 90% loss, yet again, it'll pay that 100% typically. So another popular coverage, especially on years where you have a good crop out there, and you want to protect that top end, would be a Comp 2 policy. This one's a little bit more confusing, but it's going to be a little bit more expensive than the previous two, but that's because it's great coverage. It works in a way where you take the loss percentage, you minus it by 5%, and then you multiply that number by 2. So, for example, if you had a 40% loss, well, 40% minus 5% is 35%. Multiply 35 times 2 is 70%. So instead of getting paid that initial amount of 40%, you get paid 70%. And then it gets capped down at 100%. So if you had a 55% loss, well, 55 minus 5 multiplied by 2 is 100%. So anything over 55% is going to get paid at 100%. And then you also could have Comp 3 or Comp 4. It's going to work very similar. It's just going to have a different multiplier. So Comp 3 would have a multiplier by 3, Comp 4 by 4. And another possible coverage that you could have that is popular, it's more popular on the pulse crops such as like lentils and mustard, because it might be the only coverage available for those, would be excess 10, excess 15, and so on. It's pretty simple to they're pretty simple coverages. Whatever that number after the excess is going to be the deductible amount that goes for the whole policy. So even if you had 100% loss, if you had an excess 10 policy, well, it's going to pay 90%. It's always going to take that 10% off. If it's a excess 15, it's going to take 15% off. If it's a 50% loss, it's going to pay 35%. So pretty easy. Typically, you're going to see that more on the lentils, mustard, maybe chickpeas, things like that. So one thing that, we refer to in insurance, or the crop hail side, is insurance per acre, IPA, and each company is going to have a max IPA. So what does that mean? Each company is going to set a max IPA on each crop and maybe type. So for example, irrigated wheat and non-irrigated wheat might have a different max IPA that you can put on. When factoring your max IPA, you got to take your share into account. So let's say, for example, you have a 75% share in a crop. You have to take that max IPA, multiply it by 75%, and now that is your new max insurance per acre. So for example, if you had max IPA of $400, 75% of that is $300. That's the max amount that you can put on. And then if you decide to put on Comp 2 or any other companion policy, there is an IPA factor that will affect your max IPA, as you can see below in the little form here that shows that if you had Comp 2, let's say it's $400 is the max IPA, we have to take 400 divided by 1.5. And that'll give you your new max IPA of 266. It is possible to go above the max IPA that is set, but that'll have to be requested and supported by the carrier prior to binding coverage. So typically, every farmer is different, but if you were to put them in 3 different categories, with Farmer A, Farmer B, Farmer C, typically we'll see these 3 different categories. Farmer A is going to be the type that likes to be ahead of the game. They put coverage on early on in the growing season, maybe right after they have reported their acres on the multi-peril side. They'll maybe just put a little bit on and just set it on there and forget it. One potential downside on that to be aware of would be that you might be underinsuring your crops on the crop hail side throughout the growing season. So for example, if you put it on in April or May or whatever, and then June, July comes around and the crop's looking pretty good, you might have that potential downside of kind of setting it and forgetting it, that you're underinsuring it. And my recommendation for that would be to continually assess the crop throughout the growing season and maybe consider adding additional coverage if it's looking like a good crop. Farmer B, for instance, might be the type that likes to follow the weather radar and wait till right before the storm comes to try and add coverage. I totally get that. It is a high premium. You want to wait till, to see if a hailstorm's coming. But one potential downside on that is that maybe you wait too long and you didn't have time to get quotes from the different companies to see which one has the best rate. So you might be putting your hail with the company that is charging you quite a bit more, as opposed to putting it with a company that, might have better rates and is still a great company to work with. And another potential downside is maybe you waited too long and you're not able to get that coverage on in time before the hailstorm comes. So my recommendation for that would be just early on in the year, just get your maps to an agent to give them time to quote it out. You don't have to put the coverage on, but at least allows you to quote it and have an idea of what you want to put on. So when that time comes, you can make a quick decision. And then maybe also another recommendation would just be to consider adding a little bit of coverage, and then you can always add more as the season goes on. And then there's maybe the type of farmer C that generally likes to go without crop hail insurance and just rely on your multi-peril. The potential downside on that is just that you're not protecting that top end of your crop that might not be covered by your multi-peril policy. So my recommendation is just quote out the hail coverage. It never hurts just to quote it out and see, what the rates are, see what it would cost for you. And then you can go from there. And then also just to assess your potential yield throughout the growing season and see if maybe it's worthwhile to protect that top end of your crop. So one question we always get is, well, how much coverage do I need to put on? And, we use this coverage calculator. This spreadsheet helps us give you at least an idea of maybe how much coverage you should put on. Also for reference, anytime that we quote, we're typically going to quote at $100 per acre. And then it's always easy math from there to figure out, what your cost would be. You don't always have to put $100 on. Let's say you put $150 on. Well, you just take that quote and multiply it by 1.5. Or if you put $25 on, you would just divide it by 4 or times it by 25%. So, it's just quick math. So for example, in this coverage calculator spreadsheet, if you had an APH, an approved yield of 40 bushels per acre, and you got a 75% coverage level on your multi-peril, we have a guarantee of 30 bushels an acre. And if I just threw in that $6 price point, that is the projected price for the 25 crop year, this calculator shows that, if you think maybe you had a 50 bushel crop out there and you want to protect that top end, well, this is showing that you should maybe consider putting on $120 of hail insurance to protect that top end that's not covered by your multi-peril and so forth. So if you ever are wondering, we have the spreadsheet, very helpful to try and figure out how much coverage you should put on. Some additional coverages that may be available or just are on the policy are listed below. Shows, harvest stored grain endorsement, the fire and lightning coverage. Many people don't know that, your combine starting on fire and destroying the crop is not a covered loss under your multi-peril policy. It has to be a non, quote unquote, man-made fire. So it would have to be like a lightning fire in order to be covered on your multi-peril side. So having that coverage on the crop hail side is very helpful because that's is definitely a possibility to have that fire on your crops during harvest time. So one other thing that people probably don't know that your crop hail policy may cover is transit coverage. And that's going to cover basically the transport of your grains from the field to the first place of storage up to a specified mile limit. So typically that's going to maybe be like a 100-mile limit to cover it. And then it'll typically cover a fire department service charge, maybe usually about $500 to cover that charge if the fire department were to come out. Some additional information regarding crop hail coverage would be cash discount. Each company typically will have a cash discount that they offer. Each one's going to be different. And the companies we use, for instance, NAU has a 4% cash discount if you pay by August 15th. RCIS is 5% if you pay by August 1st. Rain and Hail is a 6%, but that is due with the application. We can send a binder. For example, NAU, RCIS have 2-hour binders. Rain and Hail is 12:01 a.m. the next day. So If you decide, well, I don't have time to get you my maps, get you all the information, but you want coverage put on, the information that we need in order to bind coverage is the entity name, the county, the crop coverage type, and the crop, and then the coverage amount, the share, and your acre amount for each crop and the county. So, for example, if you had 1,000 acres in one county of wheat, and then you had 1,000 acres of wheat in another county, we'd need to know how many acres it is in each county. Our agency works with the top 3 carriers by premium in the crop hail insurance industry, that being Rain and Hail, NAU, and RCIS. They're great companies to put with. They have good rates, but also they are great companies to work with when it comes to claim time. We have had great satisfaction with them. And then what do I do if I have a claim? It's important to take the time to let us know before you go and harvest it or destroy the crop or whatever it may be. You're going to need to put in a claim immediately, and then wait until you hear from the adjuster or they come out and inspect your field before you go out and harvest or destroy the crop or whatever it may be. So just contact us as soon as you are made aware of hail damage. So thank you for listening. Please reach out if you have any questions. It was just a quick synopsis, so by all means, we're not covering everything. So if you have specific questions, feel free to reach out. Thank you for watching, and I hope you follow along all series long as we learn more about crop insurance topics. Until next time, my name is Karsten Donovan.